I do fundamental analysis. I don't want to look at charts. I don't want to read charts. Who is the chartist? What does the price action mean to me? Nothing at all. I only learn about fundamentals of a company. I select good companies, put my hard-earned money into those good companies, and sit with peace. My dear friends, if you have that kind of an approach that you can be a complete fundamental analyst, you can ignore price action analysis, you can ignore what your charts are saying, then you are in a very difficult spot. Please watch this video till the end if you want to understand what I'm trying to imply here. This video can be an important eye-opener, not only for those people who feel that to be an investor, you just need to understand the balance sheets and do not have to indulge into any basics of technical analysis. And also, friends, those who view IPOs with a lot of frenzy, they are hunting for IPOs. What is the next IPO coming up? I want to invest in an IPO. This video is for those kind of people. Please watch it carefully when I bring to you the best IPO that India had ever seen till date. Yes, I'm talking about LIC's IPO. So friends, LIC's IPO was something which everyone was talking about in 2022. In fact, this was causing a lot of interest in the minds of retail investors, employees of LIC and whatnot, right? And at that point in time, people had what in their hands? They did not have any price action to guide their investing decision. At a situation like an IPO, all you have got is the balance sheet, the numbers, the fundamentals. And what better to invest in a company like LIC, which is the largest insurance as on date as well. Now, at that point in time, friends, it had a balance sheet of 30.5 lakh CR. As of 2019, so there was an expectation that 25% stake sale by the government would have meant a bumper listing. At that point, there was a lot of interest in the minds of the people, not only because it was a bumper listing, but also because it was a listing by the market leader in insurance, right? And the way the insurance business of LIC had been growing year on year. To quote it very specifically, I would like to mention that as for April to December 2019 period, LIC collected new premiums of 1.37 lakh CR, which showed a 45.5% year-on-year rise. What can you ask for? What better kind of a business can you look for when you select a company on this strong fundamental factor, right? At the same time, this company had a sovereign guarantee of the government. So there was a lot of trust as well as good business, large amount of bumper listing. Not only was this income coming from higher premium collected by LIC year on year. Now, besides all these fundamental tick marks that LIC was, proposing at that point in time, friends, it was considered as an investment giant. Imagine a company which has the highest amount of investments in the Indian capital market, right? So on account of all these things, additionally, there were some rental incomes coming largely to again quote that there were around 388.1 CR in financial year 2019 compared to 341.4 crores a year ago, which accounted from only the rental income of LIC's business, right? So these factors were making us as a pure fundamentalist completely confident. And yes, we are confident on account of all these aspects. No doubt about it. So can we say that when you analyze a company purely on the fundamentals, LIC had tick mark on all the aspects? Wonderful business, wonderful year-on-year growth, wonderful investments that it had done in various sectors. But now comes the big but, right? The big truth for an investor's point of view. This is where you should pay more attention, what I'm going to say from now on. Investors don't make well because you had a certain balance sheet as on a certain date. This was your business growth year on year. This is how you were doing very well. You are managing your business in a wonderful way. How does an investor make money? An investor makes money if there is a capital appreciation from the time he entered into that particular company till the time he is positioned. If you had invested in LIC's IPO on the date it had come up for the listing and stayed put till date, just check out what is the wealth erosion from a company of such a wonderful track record. What better company can you find from fundamentals point of view if you have to choose for investment? From 17th of March 2022 till date, an investor who had put in his money by checking only the fundamentals has eroded his wealth 30%. You heard it right. If you had invested 100 rupees in LIC then and held that position till date, that 100 rupees would have become to meager 70 rupees. Now, the investors can argue with me on this by saying that why are you what is so big about it? What is a big deal about LIC's stock is down when stock market itself has corrected significantly from its highs? Nifty as of now, when I'm making this video, 25th of October 2023, is also facing a significant downtrend. So what is the big deal if a company is also showing some erosion in wealth when overall market sentiments are poor? Now, this could be one statement which an investor can give to pacify his own wrong decision or his incomplete knowledge. Knowledge is incomplete. It's just like a half-baked cake which you based on, you created that the position just basing your knowledge around fundamental analysis, ignoring the chart reading completely. Now, in the later part of this video, friends, I'm going to clarify to you and show it to you. Please watch, see, understand, and then form your opinion about what I am trying to infer here. So let's move on. You can see, friends, in front of you, chart of LIC as on date. On this chart, you are also seeing some lines. These are exponential moving averages with the red one showing 200-day EMA. Then there is this blue one which shows 100-day ka EMA, and the yellow one is showing you 50-day ka EMA, exponential moving averages. For those who don't understand the technicals around these moving averages, simply understand that it is showing whether the price is above its expected averages on lines of 100, 200, and 50 days, right? Now, if the prices are above these, we say that this particular stock is in uptrend. If the prices are below these lines or these averages that are drawn here, we say that particular stock is in a downtrend. Now, let's just do a little bit of chart reading here, although chart reading requires a lot of other things as well, but I'm limiting my discussion only to the point that I'm trying to emphasize here. Let's just scroll it down towards the back and see. From the day it was listed, you see these candles are not appearing behind, before this, before 17th of March 2022. You can see the date on the lower side. On 17th of March 2022, LIC was listed at how much price? You can see, you can put your cursor here and see on the exact right hand side, you can see the listing price of LIC. It was around, let's say, okay, 873. Let's just put it into a round figure, 872. Okay, at that price, it was listed. And what was the price band at that point in time? It was between a certain range. Look at the price range in which LIC was expected to come. That means the investors who had invested in LIC had paid more than the price on day one when it was listed. That means they did not even make the listing gains. Forget about the future of this wonderful company. Okay, now why I say this is just scroll it down. Don't believe me, just look at the prices. From 870 rupees at which it was listed, forget about those who participated in the IPO. Imagine you were somebody as a new investor who invested in LIC at that point in time at 870. Look at the kind of wealth erosion from then till date. Prices have been on a continuous fall. Just look at how LIC. Has LIC seen its listing price 870? Has it actually touched 870 again? Till date, the answer is no. It has not even given investors the amount that they had invested in. Look at the holding period, about 1.5 years past. 1.5 years is a significant time for making an investment because you are calling yourself an investor. Investor is somebody who invests for long term. Now, this particular company has actually failed the investors. Why I say this? As on the day of making this video, it is 607. Let's round it off to 610. So from 870 to 610, if you calculate the percentage change, right? I'll show you it in the form of a formula here. Look at the screen. This is how this approximately 30% cut in your wealth has been shown by LIC after a significant waiting period of 1.5 years. And were you somebody like a technical analyst, if you were a chartist, you would not have waited for this 30% erosion in your wealth if you understood only one single thing. When the prices are above these moving averages, you are in an uptrend. When the prices fall below these moving averages as they are drawn on the screen, you should exit. So let us see if you had some information or some knowledge about this kind of a concept. Could you have not exited? Could you not have exited at 730? The answer is yes. When the prices went below these moving averages, you could have easily exited at 730. From 870 to 730, the wealth that you would have eroded would be half the kind of erosion that you have done because you didn't know or you didn't want to learn about technical analysis. This is the reason why, friends, I emphasize even for the investors, technical analysis is a must. In this case, nobody has made money. I'm not saying that if you were technical analyst, you would have made money. Nobody has made money here. But if you knew technical analysis little bit, and I have only shown you one aspect of technical analysis here, right? Then your loss would have become half, right? Forget about gains. Even if you are able to minimize your losses, half your losses, my dear friends, as an investor, for the long term, you are in a much, much better position. Returns are the mercy of the market. Risk management is the smartness of an investor and a trader. Please mind these statements. If you are able to manage your risk, market never manages your risk. If you can cut your losses, it is you who should take the entire credit. At the same time, if your money doubles, be grateful to the market because you have done nothing to make those returns double. It is the collective wisdom, it is the collective environment, it is the economy in which you are situated has doubled your gains. Never take credit for gains and always take credit and responsibility for the losses that you make in the market. I hope, friends, this is making sense to you. One more question before I close this video to you is, for those who give an excuse to themselves that the loss in my portfolio is attributed to the loss in the market. मैं क्या करूं? Market ही खराब है, तो मेरा तो loss होना ही था. For those, I just want to show you a small thing here. I'll quickly remove these lines for the purpose of giving you a more clear picture. So I was just trying to show or unhide Nifty Prifty. This white line is the Nifty, which is a proxy for stock market. So when we talk about stock market, what is it that we have to watch? We have to watch Nifty 50. And here it is. White line is Nifty and LIC is your candles. Okay, it's as good as the market. When the markets are going up, LIC is also going up. When markets are going down, LIC is also going down. So can we conclude that because market is down, LIC is also down? We'll have to go back in a little history to see what's happening. Okay. Now, this could be an explanation as of now. At this point in time, everybody is falling, hence LIC is falling. But when everybody is rising, LIC should also rise, no? So when you can give an excuse that because market is falling, my stock is also falling, I should also compliment myself that when the markets are up, my stock is also up. But what has happened with LIC? Let's go back to the time when it was listed. Just look at the kind of divergence we are finding, or the disconnect, or in fact, an opposite connect or relationship between the stock market and LIC since the time it got listed. Markets are going up, LIC is going down. Markets are going fine, LIC is going down. Markets, look at it. Now you are going down when markets were going up, and you are going down, even more down when the markets are going down. Now, this is the truth that I wanted to bring in front of you by analyzing one wonderful company. It does not mean that all the companies will face such situations. It's an analysis that I have put across to you with a very specific purpose. Number one, please, as an investor, do not base your stock selection decisions only on the basis of fundamentals until and unless your time horizon is 5 years or 10 years. Let me tell you, if you are there for 5 to 10 years, you need nothing. Select the best companies, stay put, exercise patience, and you will be rewarded. But I understand in current environment, in the kind of investors which are coming up in the markets in the recent times, they do not have patience. And why should you? You should have more skills and knowledge, right? Patience is for those who don't have time, energy, or patience to invest in the knowledge acquisition and skill upgradation related to the market. But for those who are keen to outperform the market, for them, technical analysis is a must. In this case, just by one case, I have clearly mentioned, or I could emphasize, or I could explain to you that you could have minimized your losses to half than being a pure fundamental analyst. So friends, there are two important learnings from this particular video. Number one, never have a half-baked cake, right? Fundamentals plus technicals go hand in hand to make you a better investor. Second, IPOs, do not base or put all your money or put all your frenzy around finding out the best IPOs. Even if you are interested for investing into IPOs, your time horizon has to be a very long time horizon, 5 years or more than that. Even for LIC's case, it's not that LIC will be at 670 for rest of its life. It will rebound back, no doubt about it, because it's a fundamentally strong company. But with that, you need to add the time horizon. If your time horizon is longer time frame, then even your investment in LIC would be a tick mark, right? But believing that you want to make money in 2 to 3 years as an investor, then this fundamentally strong company has actually not made you money. Sometimes it is wiser and advisable to invest into companies which are actually being traded into the stock market. For LIC, nobody had the previous stock prices to compare the performance of that company or compare these price to earning, price to book ratios, price to sales ratios, which these fundamental analysts are using to make comparison of the stock price with the fundamentals, because stock prices were not existing. So one element of comparison, when it is missing, then it becomes a little tricky and a little more ambiguous to make such an investment. So I hope, friends, you have understood the points that I wanted to bring here in this video, right? If you like this video, do share your comments, subscribe to my channel, and have more such interesting analysis and interpretations of various companies in times to come. Thank you for watching.